Good morning, everyone. Welcome to this update for the 29th of November for global stocks and also for Australian stocks as well. And markets are pretty well positioned now for the traditional strong run into the finish of the year. Historical stats show that more than 80% of the time, the period between Thanksgiving and the end of the year is positive, and at the index level by around about 2.5%, which doesn't sound like a lot, but at the index level, that's it's not a bad rise. So the odds are certainly with us for a strong run into the end of the year. So let's have a look at what happened last week, and I must admit it was a bit of a nothing week all round with Thanksgiving in there, so a shortened trading week. So American stocks were just up by 1 point for the week, really nothing much happening. But when I look at all the economic indicators as well as the technical indicators and also the corporate fundamentals, all lights are green from my perspective. There's a lot of positives. We're seeing small cap stocks and also cyclical stocks outperforming. So consumer cyclical stocks, which includes home builders, home improvement products, and a lot of retail stocks are actually doing quite well, and they're outperforming consumer staples. So that means that people are prepared to put money into what are more risky, economically sensitive stocks than they are into the safe havens. So all good signs that the consumer is getting more positive, and also that American stock participants are prepared to invest in that. We're also seeing, after a very frustrating period of about 3 months where the biotechs, despite the fact that they were quite clearly the strongest during the earnings season, they've been one of the weakest in terms of share prices. So that apparent anomaly has been a real head scratcher for quite a few months now. But there certainly are some signs that the biotech sector is improving. And we're also seeing the breadth of the market improving. So yes, the market is still being led higher by Amazon, Facebook, Google, those sort of stocks, but increasingly there are more and more stocks that are trading now above their 50-day moving averages. So we're seeing more and more stocks participate in the rally, and that's a good sign for it to continue. So as I mentioned before, it was pretty much a nothing week in terms of progress. The S&P hardly moved, and net was only a point. But as I've also made the point on several occasions in the last month or so, there are a lot of fund managers that are significantly underinvested, and they're going to be forced to chase this rally, because the worst nightmare for them is that the market goes up and their clients' money is not keeping pace with the general rise in the market. That's absolutely their worst nightmare. So they're going to be forced to chase this rally irrespective of what they think of it. So I think there's a very good chance that we could see new highs by the end of the year. So let's take a look at the market now. So you can see on the S&P, essentially virtually no movement. We had a little bit of a blip down on Tuesday, but really, and the market recovered, but it's really all been pretty mild, really. So if we just look at this whole period since the mini crash in late August, we had a substantial decline, all in the space of basically 3 days. We then got a rally, which is not unusual. We then got a retest of the lows, again, perfectly normal, and then an incredibly rapid rebound. Got up close to resistance, so no surprise to see a pullback, and guess what? It pulled back to exactly the 38.2% retracement level of the rally from the bottom, which was down here on September 29, to the peak, which occurred on the 3rd of November. So an exact 38.2, a rebound, and you can see quite a strong rebound. 2 of those days were very big up days, and ever since this this low here on the 25th of September, you can see that all the big range days pretty much were green. There's only two down days two red candles that were significantly of any size. So there's unquestionably a lot of buying strength in this market. If we look at the NASDAQ index, the technology stocks have certainly been leading the way, Facebook, Amazon, etc. And you can see that it's trading at new all-time highs. These were the pre-August correction highs. We're above that. And if we also look at the Russell 2000 index on a weekly chart, you can see it's still lagging, but it is picking up. Small caps are starting to outperform the larger stock indices now. Just while I'm here, I'll just look at the US dollar index, which is still showing a great deal of strength. So it managed to gain during the week and is now just a tick over, just popped its nose over the top of the 100 mark. It'll find some resistance at that level, I'm sure, technically. So there's the chart going back to before 2008, but in fact going all the way back to 2000. So you can see that we've had a run up to 100. We had a consolidation back to 93, and we've run back up to 100 again. We may pause again here for a little bit, maybe pull back a few cents, but the fundamental drivers for the US dollar, with US interest rates rising and stimulation in Europe in particular, and also in Japan continuing. So it's hard to see what's going to derail the continued rise of the US dollar. Turning now to Aussie stocks, the Aussie dollar was a little bit higher, and that's been unexpected. It's still within its trading range. It's unexpected because the US dollar is going up and also commodity prices are going down. Both of those things should be negative for the Australian dollar. So why the short-term strength? I don't know, can't explain it, and I'm not losing too much sleep over it, to be honest, because trying to put a label on every short-term movement in the market is really a bit of a waste of time, because it could be nothing more than some large hedge funds taking a particular speculative position. Now the ASX 200 was down by 54 points on the week. Probably won't change very much on Monday, I wouldn't think, and the damage was really done in the miners. So US dollar higher, commodity prices under pressure, and hence the miners under pressure. So that's really the essence of our market. Our banks had rebounded the two previous weeks, so that rebound has run out of puff. Sorry about that message. And yeah, that's really the story of the Australian market. Struggling to find good value in the Australian market. Yes, there's some speculative smaller cap shares that are going up. There's been a lot of noise made about the stocks that are supplying baby formula and milk products to China, such as Bellamy's and A2 Milk. But outside those sort of really speculative stocks, Blackmore's another one that's supplying China. But if you get into the larger cap, more resilient stocks that investors are interested in, then it really is pretty tough to find good value and growth at the same time. So let's just take a look at the Australian index. There you can see not a great deal happening of late. It's really been stuck in this band now since about the middle of August. So it's been fluctuating between just under 5,000 points and about 5,400 points. And at the moment we're sitting just a tick above the midpoint of that range. It's an absolute toss of a coin which way it goes in the short term, in my view. While I'm here, I'll just look at the gold charts. This is gold on a daily basis, and you can see the support there that broke down about 10 days ago, and another sharp fall on Friday night. So gold really looking very sick. There's been virtually, once we've had that breakdown, in fact, we got down to the double bottom and really failed to rally at all. It was only one day. You can see here on the 16th of November, just the one day where the gold market tried to rally, but ended up closing on its lows. And then from there, it's just really gone straight down. If we look at this on a weekly chart, you can see it more clearly. There's this long-term downtrend which started, this long-term uptrend line that started in 2006, and that's been broken. We've got another important support at around 1,020, and you would be very brave to say that it's not going to get down to 1,020, and if that level breaks, then I think you're going to see a real flurry of selling. I'm not sure. It's pretty hard to see the price of gold getting down below 700 because the cost of production has gone up, and I think anything significantly below $1,000 for more than a handful of months, you're going to see a lot of gold mines being forced to close because a lot of them must be borderline economic as it is now. So gold lower by 20 for the week. 1,020 is now the target, and copper was steady on the week at 208, which is a little surprising given that the US dollar did find some further gains. So a bit of resilience there. And crude oil also managed to hold steady at around $42. But from a fundamental point of view, looking at supply versus demand balance, which is really the ultimate driver of the price, then the downward pressure still remains. So the situation in the crude oil market is that crude oil demand is still rising. Don't get the view that crude oil demand is falling. It is still rising, and it's still rising at a reasonable rate. The problem is that the supply of oil has just completely overwhelmed the rise in demand. And the price hasn't been down low enough for long enough yet to permanently drive companies into bankruptcy and therefore reduce the amount of supply on a permanent basis. What has happened is that companies have curtailed some of their production with these low prices, but they're still operational. And as soon as prices go back up again into the 50s, then those companies just turn the production back on again. And so we're back to square one. So what it's going to take for the oil market to find a bottom is for the price to be down low enough for long enough. Now, I'm not sure where that level is. I've seen levels. Goldman Sachs are talking about oil down at $20 a barrel. I don't know whether it's going to take that sort of decrease or whether just staying somewhere in the 35 to 40 range for 6 months will do it and force enough oil companies to the wall. But that ultimately, I think, is what's got to happen to really find a floor in this oil market. So my overwhelming advice to you is stay clear of the energy sector. Don't try and pick the bottom. There's lots of people trying to be heroes and tell you that now's the time to buy oil stocks. I certainly don't see it. There's the spot copper chart. You can see we've found a little bit of stability over the last week or two, but still a very, very strong overall downtrend. So to wrap it up strategically, as I said last week, I continue to see an environment which will be supportive of equities. The American economy is not fantastic, but it's good enough. American corporate profits aren't fantastic, but they're good enough, particularly if you exclude the energy sector. So if you cut out the energy sector, the US stocks were, the earnings growth in Q3 was actually pretty reasonable. Their debt levels are good, their cash levels are high. We've got lots of mergers and acquisitions. We've got low interest rates for as far as the eye can see. It really is a good environment for equities because I don't see that it's an environment where the market is suddenly going to charge off and therefore you get to a point of excess which then has to correct. I just think we're going to see some progressive, steady, mild increase in the market, and the best stocks and the best value stocks will do well in that sort of environment. We've also got some really strong seasonality at this time of the year, and we're also seeing the sector leadership providing confirmation. By that I mean consumer discretionaries outperforming consumer staples. We've got small caps starting to outperform large caps, so we're getting much more much more breadth in the market. So it just really does tick a lot of boxes in my view. So we're set up for a pretty good finish to the year. However, I would just note that it's pretty normal to get something like a 2 to 3% correction for a few days or a week in December. December is rarely just a straight up and away where the market just goes higher every day. So you really should expect a short, sharp pullback of a few percent, and I think that would provide a good buying opportunity. So that's it for this week. Anyone who's not a member of Specialist Share Education that would like some more information about how I might be able to assist, there's my contact details. Please feel free to get in touch with me. Talk to you again next weekend. Cheers.